Good afternoon, everyone. Wishing all of you a happy new year and welcome to our first webinar of 2023. So GST Law has started New Year with a bang as all of us approach towards New Year Eve. So government kept on issuing multiple notifications, clarifications. So in today's session, we'll be discussing key changes, key clarifications and their impact. Unfortunately, most of the amendments and clarifications related to ITC, and ITC was supposed to be the highlight when GST was introduced, and it was expected to be a simplified regime. But with each passing day, ITC provisions are becoming more and more complicated. It seems more to be like Chakravyuh. Just like in Mahabharata, Abhimanyu knew how to go inside the Chakravyuh, but not after that. Similar is the fate of all the taxpayers. They know how to claim ITC, but do not know what will happen to them thereafter. With this, we start today's session. With me, my colleague Swati is there, who will be taking us through various changes. Over to you, Swati.
Thank you, Puneet. Good afternoon, everyone. In today's webinar, we'll first be discussing ITC-related changes, then some other changes, and then some misses that were there in 48th GST Council meeting. And after that, we will have a live Q&A session. The first change is related to ITC on export freight. The transportation services of export goods where the recipient and supplier both are in India. Place of supply in such case is destination of goods, which is always outside India. In this case, till September 2022, there was exemption of the service, and from October 2022 onwards, the exemption is withdrawn, and this is now taxable. IGST is payable in such cases, and supplier usually report the place of supplies as other territory. Now, this created a confusion amongst recipients whether ITC will be available to them or not, since the place of supply is other territory. On this, government has recently issued a clarification. It says that supplier of service shall report such services under State Code 96 foreign country in the GST 1, and further ITC will be available to the recipient since it's not barred in section 16 or 17 of the CGST Act.
So this was a totally unwarranted controversy which some people had in their mind, because for export of goods, even if place of supply happened to be outside India, but because both the service provider and recipient were in India, so GST was applicable. And here the exporters were satisfying all the conditions of claiming ITC, including levy of IGST in this transaction. So to that extent, it's a welcome clarification. It also supports the view that ITC of IGST can be availed where place of supply is other state, and this may arise in multiple situations like renting of properties depending upon location of landlord and the property. So to that extent, it's a welcome clarification.
The next change is ITC availability, where tax is not paid by supplier. So in GST, section 16 subsection 2 clause C is there, which says that ITC is available to recipient if supplier has paid tax to the government. Now there is section 41, which states that if tax is not paid by supplier to government, then recipient needs to reverse ITC. A new rule, Rule 37A, has been introduced in terms of this section, which says that if supplier furnishes invoice or debit note in the GST 1, but does not file GST 3B till 30th September of next financial year. Here, this next financial year is the year subsequent to the year in which ITC is claimed. So if invoice is issued in year 1, ITC is also claimed in year 1, then 30th September of year 2 will be seen. However, if invoice is issued in year 1, ITC is taken in year 2 within 16 time limits, then 30th September will be seen in year 3. So if both these criteria have been satisfied, then recipient will be required to reverse ITC till 30th November of next financial year. If it's not reversed within the time limit, interest is also there, which is payable under Section 50. Recipient can re-avail such ITC if supplier subsequently files GST 3B.
So, a very important and relevant change which affects many taxpayers. And to give a background, GST law since inception had a condition that GST is payable. ITC will be available only if supplier deposits are taxed, but there was no machinery provision. Then in 2019, government introduced Rule 36(4), which provide different buffers over a period of time. From January 2022, they introduced a substantive provision, which is 16 subsection 2 clause AA, which says that it should be reflected in recipients GSTR 2A and now 2B. And now this 37A has been introduced. So in one way, the government has now clearly provided what procedure needs to be followed by recipient for determining whether its supplier has paid tax or not. One important aspect which we discussed in the previous slide is that for any financial year, if your supplier files a return, he pays the tax by 30th November of next financial year, that will be sufficient compliance. So to that extent, during that period, even if there is a delay, etc., this provision clearly indicates that as far as recipient is concerned, his ITC will not be affected. To that extent, it's a welcome change. Few more points which you should keep in mind is that the way this provision is worded, this will trigger only where supplier does not file GST 3B at all. Whereas there may be many practical situations where GSTR 3B is filed, but the supplier does not pay full tax. So say, for example, in GSTR 1, the tax was 100, but he pays tax of 80 or 19 GSTR 3B. So in all such situations, this provision will not trigger and again will not warrant any reversal at recipient's end. This we have already discussed. So you have buffer till 30th November of next financial year. Now, this again is a substantive provision in the form of procedure what recipient has to follow, which has been brought in the statute book on December 26, 2022. So in our view, because it's a substantive provision, it will apply only to ITC availed post December 26, 2022. And so for any taxpayer which is filing returns on due dates, so the first return where this provision will become relevant is of December 22, whose return will be filed on January 20th, 2023. Next, a very important and relevant miss in this provision is that there may be multiple situations of B2B supplies where the supplier has not filed 3B, where he has paid tax through DRC 03 or in any other manner where the department themselves collect the tax, etc. So this provision does not clarify what will happen to ITC in such cases. In our view, ITC being a substantive right, merely because this provision does not deal with this, ITC cannot be denied. Lastly, and which we have been discussing for last 5.5 years, is that this provision is totally invalid, because for a bona fide recipient who has purchased goods or services, who has reimbursed tax to his supplier, his ITC cannot be denied on the ground that his supplier do not pay the tax, which is duly supported by many High Court rulings, including affirmation of a couple of rulings by Supreme Court also in erstwhile VAT regime. So despite this provision, bona fide recipients can challenge denial of ITC in such cases.
The next change is regarding verification of differential ITC between GSTR 2A and GSTR 3B for financial year 17, 18 and 18, 19. For this, government has come up with a clarification, a procedure which an officer will perform to verify the unmatched claims of ITC. Here, unmatched means ITC has been claimed in GST 3B, but it's not reflecting in GST 2A. So firstly, proper officer will seek details of unmatched invoices or debit notes, and thereafter it will verify whether the recipient is in possession of invoice or debit note or not, whether the supply of goods or services have actually been received, whether the tax has been paid by supplier to government or not, if ITC has been claimed within the due date given in section 16 subsection 4, if there are any reversal requirements in section 17 or 18 of the CGST Act, whether the recipient has made payment of tax and value to supplier within 180 days of issuance of invoice. In regard to this condition that tax shall be paid by supplier to government, they have come up with further criteria. If the unmatched ITC exceeds rupees 5 lakh per financial year per supplier, recipient need to submit a CACMA certification to the proper officer on the fact that supply has actually been made and tax has been paid to the government. However, in case the unmatched ITC is up to rupees 5 lakhs only, the recipient need to submit a certification from the supplier itself on the fact that supply has actually been made and tax is paid to the government. Now, this entire procedure applies in certain cases only. In case where GST 1 has been filed, but GST 3B is not filed by the supplier. In cases where GST 1 and 3B has been filed by supplier, but that particular supply is not reported in 1, and hence it's not reflecting in GST 2A of the recipients. Where 1 and 3B has been filed, but a particular supply has been reported as B2C instead of B2B, and thereby it's not reflecting in GST 2A of the recipient. GST 1 and 3B has been filed, but the supplier is reported with wrong GST of the recipient.
So a very important clarification and is relevant in today's context because many of the taxpayers are undergoing departmental audits, investigations, and particularly on the ITC point. So one larger point we feel is that this clarification lacks statutory backing because one, it is given through clarification. It imposes conditions of getting certificate from either from a chartered accountant, CMA, or from the supplier, which is nowhere prescribed in the law. So there should have been a legal provision either through an amendment in the act or the rules to prescribe that, which is lacking. Second, the starting point of this clarification is that for first 2 years of GST also, 2017-18 and 18-19, a two-way comparison should be done, two-way reconciliation should be done, and whatever differences are there, it provides a manner in which those need to be explained to the authorities. So for in first 2 years of GST, GSTR 2A was totally irrelevant because even Rule 36(4) was being introduced subsequently. Supreme Court in case of Bharti Airtel clearly held that 2A is more a taxpayer facilitation measure which GST portal gives that does not create any entitlement or disentitlement of credit. The government on number of occasions through press release at the time of extension of annual return or through its circular also clarified that 2A will not determine the eligibility of credit. So to that extent, when the statutory provision for 2A is missing, still imposing a requirement of reconciliation, etc., in our view is not correct. To that extent, this clarification is unsustainable. Secondly, in any case under GST law, be it section 16(2) AA, which was a substantive provision in GST Act introduced from January 2022, or Rule 36(4) was also introduced in October 2019, which is much post this period. Third and most important aspect is that these variances occur mostly in situations where our clients deal with the suppliers who are one time, who have executed a job, and then they are not traceable. But the clients continue to be bona fide recipients. So in those cases, as on today, which is more than 3.5 years after end of these periods, etc., when the suppliers itself are not traceable, then neither C or CMA can verify whether the supplier has paid the tax or not, or nor the supplier himself can give the certificate. So this circular is silent as to how government will deal with such cases, and in all likelihood, they will disallow such credit. Circular is silent as to what will happen for period 2019-20 onwards, where particularly till October 9, 2019, there was no provision. And practically many audits are happening for last 3 or 4 years of GST only. Last and again very important aspect is that this circular clarifies that this verification mechanism will not apply to completed proceedings. It will apply only where the proceedings are in progress or where those are in litigation, etc. So the scope of completed proceedings is not clear, meaning that suppose as a company, if I have undergone a departmental audit or investigation, then can I tell the authorities, any authorities which come in future, that you cannot ask for this verification, etc., because my proceedings are completed. So to that extent, in our view, this clarification clarifies less and open more questions, which unfortunately taxpayers need to face in coming times.
Coming to the next change, ITC reversal on non-payment within 180 days. In section 16, for availment of ITC, there's a condition that recipient must pay to the supplier the value and tax within 180 days of invoice date. Rule 37 has been prescribed in that section. It says that if recipient has availed ITC and it fails to pay supplier within 180 days from the date of invoice, then ITC need to be reversed along with interest where the rate is notified under section 50 subsection 1, and interest will apply from the date of availing ITC. So this is the original rule 37 which was there before October 2022. This created some confusion amongst the taxpayer. First, whether contractual terms will lead to failure to pay. So if someone is paying beyond 180 days, but it's contractually agreed between both the parties, will that also lead to failure in payment? In our view, this will not lead to failure since it's contractually agreed between both the parties, and failure is towards supplier and not towards government, and here there's no failure. Secondly, there was no reversal mechanism in the Rule 37 since rule gave a mention of GSTR 2, which have been unoperational since the inception of GST. So there is no clear reversal mechanism in the original Rule 37. Then Rule 37 says that ITC need to be reversed proportionate to the unpaid amount. However, in the section 16, that is in the statute, it nowhere says proportionate ITC is required to be reversed. So there was no clarity whether full ITC reversal is required or proportionate. So if we summarize, till September 2022, proportionate ITC reversal is required as per rule. Interest at the rate notified under section 50 subsection 1 is payable, and interest will start from the date of availment of ITC. However, in October 2022, Rule 37 was amended, which prescribed that total ITC reversal will be there irrespective of the unpaid amount. Interest will be payable under section 50, and there was no mention about the starting date of interest. So we can infer that interest will start from the 181st day. Recently, the Rule 37 has been again amended retrospectively from October 2022. According to this, ITC will be proportionately reversed. Interest will be payable under section 50, and it will start from the 181st day only.
So a couple of welcome changes in this provision. One, prior to this recent amendment, there was ambiguity that suppose I have purchased goods worth 100 and GST of 18 from a supplier of 118, and say I pay 70 rupees to him. So the way the provision was worded that even though I have paid substantive amount, not fully, but still my full ITC reversal was warranted. So they have corrected that anomaly. They have brought it in line with the pre-amendment that to the extent I have not paid, ITC reversal needs to be done. And second, conceptual change which they brought in the last amendment also, that earlier the ITC needs to be reversed and interest had to be paid from the date of availment of ITC, whereas now interest needs to be paid from 181st day, meaning when the default happens. Couple of open points in this is that the way section 16 is worded, it still says that when I do not pay value of goods or services and GST to the supplier, full ITC needs to be reversed. So all these relaxations in terms of proportionate ITC reversal is coming through the rules, whereas the CGST Act says to the contrary. So to that extent, legally, this provision itself is invalid. The government ought to amend the section 16 of the CGST Act. That will be the right way. And second, as far as interest is concerned, even though for interest it refers to section 50, but if we go through section 50, there is no provision or there is no subsection which deals with such situations for levy of interest. So to that extent, in our view, there is no provision for levy of interest itself.
Now we'll discuss some other changes. In GST, there's Schedule 3, which specifies a list of activities which are neither supply of goods nor supply of services. In that list, 3 activities were introduced from February 2019, that is merchant trading transaction, sale of warehoused goods, and high sea sales. Post introduction of these 3 transactions, there was a confusion in the industry whether this non-taxability will apply from February 2019 or retrospectively from July 2017 only. So now it has been clarified by government that it will apply from July 2017 only. However, if someone has paid tax in the intervening period, that is July 17 till Feb 19, refund will not be granted. Further, in services exemption notification, there's an exemption entry which says that renting of residential dwelling to any person is exempted except a registered person. Recently, an explanation has been inserted in this entry which says that if residential dwelling is rented to a registered person who is a proprietor of proprietorship concern and who's taking this residential dwelling for its personal purpose and not for the business purpose, that is on his own account, then also there will be no GST liability. This exemption will apply from July 18, 2022 itself, even though it's inserted now, because this explanation has been inserted under section 11 subsection 3 of the CGST Act, which says that if government wishes to clarify the scope of some exemption, then they can insert an explanation within 1 year, and that will have effect from the original date only. Next, a new rule, Rule 88C, has been introduced, according to which the council will recommend a tolerable amount or percentage of difference between 1 and 3B, beyond which an intimation will be given to the taxpayers in DRC 01B, seeking them to explain the difference or to pay the differential amount along with interest. If taxpayer does not reply or does not pay the differential amount, then recovery will be made in section 79. Further, the subsequent GST one will also be barred.
So one point in this provision is, even though this provision has been introduced, but the GST Council has not yet recommended the amount in percentage of difference. So till that it is being done, so this provision will not be effective.
Next, in regard to mandatory compliance of e-invoicing, there are certain transactions or supplies which are out of the ambit of invoicing, like banking services, GTS services, insurance services. So there was a confusion in the industry whether this exemption applies transaction specific or the supplier specific. So now a clarification has been issued which says that this exemption will apply supplier wise. That is, a supplier who is supplying the GTS services or other services. Then the exemption will not apply specifically to that GTS service, but to entire services of that particular GTS supplier. Next, EV bill is required to be generated for imitation jewelry. It has been proposed that GST-1 will contain some specific column for reporting supplies made through and by e-commerce operators. Next, the filing of GST-1, GST-3B, annual return, TCS return, and some other returns will be restricted beyond 3 years from their due date. Yeah. Now, Puneet will take the session forward.
Yeah. So, last few set of changes is that this decriminalization of offences has been done. So, it is proposed that prosecution will not be launched in cases where someone is obstructing or preventing any officer in discharging his duties, tampering with material evidence, or failure to supply information. Very importantly, threshold for launching prosecution has been raised from 1 crore to 2 crore, except for situations where invoices are issued without making a supply. And the government has also reduced compounding fee for different offences, which is also a welcome move. But yes, all these changes are yet to be notified. Then some litigation procedure related changes which government has made is that one, they have clarified that if a show cause notice has been issued under section 74, namely invoking fraud suppression, etc., but eventually appellate authority or court holds that fraud suppression was not invocable, such show cause notice will be under section 73. So the crux of this clarification is that whatever is the demand within the limitation period of section 73, which is 2 years 9 months from the due date of filing annual return, so that only can be confirmed and remaining will be dropped. There are some procedural changes with regard to appeal filing, etc. So one major change which has come is that if the order in original has been served on GST portal, then there is no requirement to submit self-certified copy. On the other hand, where OIO is not uploaded on GST portal, then the taxpayer needs to file self-certified copy within 7 days of filing the appeal. In all the cases, the date of final acknowledgement of APL 02 and date of issuance of provisional acknowledgement will only be date of filing of appeal. Only in a situation where OIO was not uploaded on GST portal and taxpayer delays in filing self-certified copy, then date of filing of self-certified copy will be date of filing of appeal. And identical changes have been done for department appeals as well. The government has also introduced facility for withdrawal of appeals by taxpayer as well as the revenue before order in appeal is being passed. So there have been few misses also in GST Council meeting which were very expected. Taxability of ethyl neutral alcohol, which has been pending for years before GST Council and as well before the Supreme Court as well. Taxability of cryptocurrency, virtual digital assets, online gaming and casinos. Now, one important statutory change which government was made that the government wounded up the National Anti-Profiteering Authority and all those cases were transferred to Competition Commission of India. So the government has not notified the manner or procedure in which CCI will deal with such cases. And lastly, there was absolute silence on setting up of GST appellate tribunal. So with this, we come to end of today's session. Thank you for joining in large number and goodbye.